Hello once again, I'm Burry. Thank you for joining me. Next week is going to be week 11 of 2024, and today is March 7th around lunchtime. And so we are seeing the predicted peak set in for markets on the 7th, right in that 100% window that was predicted by the model. We're seeing strength into today, so very nice. And then I believe that the market will go sideways and fall into roughly March 12th or 13th for a bottom. So I have some graphs to obviously support my thesis. Hopefully you've enjoyed the prediction so far in 2024, seeing how hyper accurate the model has been in a very high level macro view. Pretty amazing. We have about 338 weeks until our AI NASDAQ bubble forms into Labor Day of 2030, and then the Great Depression kicks off in 2031. So we still have about 6.5 years until that point. So that is what I believe the whole market is marching towards. Let's jump into some of the slides. As always, I'm trying to keep a perspective and an eye on Labor Day of 2030, as I believe that will be the final macro peak of markets. And so this slide is just a placeholder, show week after week to keep that in perspective. This graph is new this week. Essentially what I did is I took my 5-minute peak model with the teal wave. It's my Federal Reserve algo model, and essentially it predicts peaks. You can see that it predicted the end of July for a major peak based on the 1, 2, 3 touch points in the teal wave, and then projected out to the top of the graph gave you the end of July 2023. And you can see 3 touch points now going into right about now, March 7th. So I believe we're seeing the peak in the markets right here. And then this is just more or less the keep in the slide deck to show you how accurate the model's been since the predictions it had in early February. And you can see that it's predicting some type of peak out towards March 6th-ish. I don't think that the holiday had been removed yet from this data set, so it's actually more towards March 6th and 7th. If you remember, I think February 19th was removed from the date sequence, so this would bump back this projection out one day, so it would be March 6th and 7th in this peak projection. So it was actually very accurate, predicting the strength that we're seeing today in markets on March 7th. Again, I like to keep some of the old predictions around to show you how accurate these models are. If I update them every week, you won't believe me, and probably most won't go back and watch the videos from previous weeks. So, but for the few that do, thank you. But I just wanted to show you essentially how the model continues to be pretty fine-tuned, right? Predicting a peak would happen right around now, around March 7th. And this is a daily model. So pretty accurate so far, right? Pretty astounding. And again, this is a 60-minute weekly model for the zigzag model, and predicting a peak around the first full week in March, which that was this Monday. Weekly models are based on the Monday of the week, so the week of March 4th would be this week. So predicting that there'd be a macro peak in markets this week. So pretty cool, huh? We're seeing markets hit all-time highs here. Pretty sweet. And then as you saw last week, essentially the 60-minute peak model projecting that there'd be a major peak in markets right around here, March 7th. So pretty awesome. As we move from the macro down to the micro, we'll move into the March 12th and 13th bottom in markets as well. So hang on. If you'd like to donate and support my work financially, feel free. My goal is eventually to have a 12-month rolling target of $100,000 in donations. I believe that my models are extraordinary. I believe they can outperform many of the forecasts that are provided to hedge funds in New York and other in Connecticut and other high-end portfolio manager areas. So the experiment is to see if the general public wants to have such videos as well at their fingertips for based on crowdfunding. So please feel free to use the QR code or the link in the description below. I'm at about $200 this year. So again, my goal is 100,000 every 12-month rolling. So if you want to help me get there, please feel free to donate. Thank you. And please share my work with others. Thank you so much. And one of the extraordinary graphs that I think really showcases the abilities that I've developed. You can see that the model was predicting that there would be a major peak in markets on March 7th, right here. So astounding, huh? Yeah, that's pretty crazy when this model was created or refreshed back in mid-February. So right on target. And this model is also from last week, essentially also projecting the March 7th peak in markets. So this is one of my original short-term bottom models, and essentially I have three touch points. The 2 is just a very slight jump in the orange wave, gold wave, but essentially that predicts that there will be a bottom in markets on roughly March 13th. So that's the first graph. I think I have like 3 of them. So again, if you haven't subscribed, please consider subscribing. I'm trying to reach 3,400 subscribers, and that will turn on the chat or comment feature under the videos. So that's my goal. So please subscribe if you haven't. Please share my work. Word of mouth means a lot to me. So again, markets peaking, I believe, here on March 7th, roughly, for 100% accuracy and prediction made months ago about March 7th. And then markets will cool off into the 13th. I think they'll kick up for a little bit there and then finish off into late March. But this is what I'm seeing right now. And I have a few more models for March 13th as well. So let's keep moving. This is a 10-minute model. Essentially, it has 3 touch points going out to March 13th bottom in markets. So I think when markets finally break, they'll sell off and bottom on roughly March 13th. Usually, I mean, you might put half a day probability on the 14th and a day and a half before the 13th. So it's usually a 3-day window, but it usually gets pretty close to the flagpole, so to speak, on the prediction. Not usually too much after it, usually a little bit before it. So I would put the emphasis on a day and a half before the 13th. So the 13th, maybe end of day 11th, if that's a business day, through the 13th is kind of the 100% window, and then the early morning hours of the 14th would be like a 3-day window for hyper accurate forecast. So again, this would be a peak in the markets here on roughly March 7th, and then a bottom in markets on roughly March 13th. Again, if you haven't subscribed and you find my work highly amazing and alluring, I've spent 20 years building these models. I think 20. Oh, the concept was around for, I came up with the concept maybe around 2003. So it's been over, about 20 years. And then I started building the models in 2009, 2010. So if you really enjoy them, please share my work. Again, comments under the videos turn on at 3,400 subscribers. So please share my work. Word of mouth is the most important advertising that I can have to my benefit. So please consider that. And so the purple wave at the bottom has a bottom in markets roughly around March 13th. There's the first point that's off the chart, but essentially for zooming purposes, 2 and 3 line up pretty well. And then the green wave also have 1, 2, 3 going out to a bottom in markets around March 13th as well. So again, I've provided, I think, 3 videos here, or 3 charts here that support the March 13th near-term low. And so again, please feel free to subscribe, hit the like button, things like that. Let's keep moving. So nothing really new here. Just like to keep the old charts around, right? Predicting that the final bottom in markets will be around the Fed date. And again, this model was refreshed at the end of January, maybe early February, predicting that the final bottom in markets would occur around the end of March, late March, around that Fed meeting. So I believe we're seeing peaks here on March 7th in the markets, and then we'll go sideways to lower into the Fed meeting. And I think the Fed meeting obviously would spur markets to go higher again. So then I like to look at the macro view, the purple wave, or trying to understand where the macro bottoms are. And you can see usually when there's 3 touch points below the top of the graph, or that top black horizontal, usually it creates like a bust in markets. So you can see the purple rose above the top black horizontal. But when it stayed trapped, or you form 3 touch points before or below that black horizontal line, it creates tension and crashes the market. So that gave markets an arrival of the end of October for a bottom in markets, and then you can see there's 3 touch points in the white there, going out to roughly the Fed meeting date, announcement date at the end of March. So that's the next major bottom in markets, and I think because three touch points are below that top black horizontal line, I think that there should be a substantial drop in markets. I would hope, but we'll see. But yes, usually tends to create more weakness going into that point than not. So again, if you haven't subscribed, please consider it. Please share my work. Appreciate it. And essentially, there's 1, 2, 3 touch points here in the gold wave, and essentially picking out the roughly the Fed date for the bottom of the market. So this model was created, as you can see, near early February, I think. And so I think this is my original way of timing macro market crashes, is using the gold wave. This is so it's come a long ways, right? This is my original model, and so this is how I used to time markets. So you can see how far advanced I've moved, and I haven't really been able to predict peaks until the last 2 or 3 years. So you can see how far I've come in my strategy and my theory and my system and how I approach markets. And so you can see how refined I am. Go back to a 10-minute daily chart in the middle of the presentation and see how many peaks the model has predicted correctly. So that's a huge advancement in the last 2-3 years. So really trying to work on my macro skills of predicting markets. So hopefully you really enjoyed this. Again, please share my work. Please subscribe. And if you have never donated, please consider it. If you want to buy me a pop or a new car, whatever you want, I'm glad to receive your donations. And I take great joy in this. So hopefully the audience does as well. And at some point, the donations kind of reflect that the audience is really enjoying these. So that's my hope, right? I want to do this for free, so to speak, so that anyone can view this. That it's extraordinary work. It's free to the public. Hopefully, my work becomes somewhat of legendary, and at the same time, users are excited enough to also donate. So bring the users into the game a little bit as well. So thank you for joining me this week. Until next time, I'm B.R. Schultz. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use
only.
Only. Right. And what's this say?
Warning.
Disclaimer.
I am not
a licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.